All right, good morning and welcome back to Minteki.com. Monday, April 19th. Sitting here just around 10 a.m. Eastern Standard Time, trading a New York session. What I'm going to show here is a trade that I took just a few minutes ago during the New York opening hours, and the trade is already paid out, and we can see that below with my tickets, as you can see. Now, basically what I've done is there's been a question lately is how much do I need to start trading and what can I do? And basically what I want to do is at this time of, so say, economic crisis, show people how they can make a living trading the Forex off of just a $500 account. And you can see that is what I've done here is I opened up a $500 mini account and I'm going to be trading that. Now what I'm doing is using my 2% risk ratio on the account. So as you can see here, we'll get into that a bit later. First off, let's talk about what I looked at and what I was interested in coming here into this trade was this line of supply here that we've seen on the Euro USD 1 hour compression. And when I was looking at this pair here, we were at the point in this market where we were deciding once again what this pair was going to do, and I was looking for the break of the line of supply to create a potential movement north here where I can pick up a few pips. Now let's move this down to the smaller compressions and take a look at a few interesting things here that led me to believing that this movement was going to end. Now the supply line was forming off of movements south that we can see here in this market starting from this point right here. And when I took this initial movement, what I saw in here was nice respect back to the supply line, a payout to 100% fib expansion, a retracement back to the supply line, a payout of the 161.8, then the movement back to the supply line. Okay, so here was my first move completed. Now also what I continued here on to see was that a new movement was formed. I took my fib expansions. What we can see is the retracement back in the market, payment of the 100% fib expansion of that movement, retracement back to the supply line, payment of the 127.2, retracement back to the supply line, and then completion down to the 161.8. Then we saw the market here consolidate nicely here at the bottom of the movement of the 161.8 payout on that movement. So what I was looking for here now was to see if this market was going to in turn set up a new movement south, and if it did, then I would be interested in trading that setup off of the new movement south. But also what I was interested in was a break of the supply line, and we did see a break of the supply line, and let's go ahead and take a look at the trade that we took on this pair. Moving it down to the 15-minute for a better view of the movement that we traded. Okay, now what we can see here is the market bottoming out at that 161.8, completing its movement, and then what we have in here is about a 20 pip movement early New York that we have coming in. We see the fake out being the retracement, and now what we're seeing here, we're a continuation of the movement coming through. And we saw the market here take out the 100%. We saw a new retracement off of that, and from this point here at this level is where I took the price and bought in at the 1.3440 price level, putting my stop just below the 61.8 of the first movement at the 134.2. And what this created here was a 1-to-1 risk-reward ratio where I was risking 20 pips to the bottom and looking for a completion to the 161.8, which was 20 pips away. And you can see that below where I have my entry at 1.3440, my stop loss at 1.3420, and my top profits here at 1.3460. Now what you can see here below is two separate trades, but in reality what they were acting as one trade in the market, because again what I'm trading here is the 2% risk reward on, or excuse me, the 2% risk ratio on my account. That's my money management, plain and simple. So I started off with $500 this morning with my new fresh mini account, okay, and I took 2% of that as my risk, and 2% of 500 is 10. So I had $10 to risk here, so I was a trade with 20 pips of a stop loss, so I knew that I could be in at 50 cents a pip, and that's exactly what I did here. I had a 10 cent and a 40 cent lots open, and you can see that these were taken out very shortly here. We had the pullback in the market where I got in on the retracement and then the completion right there. And if we take a look at the smaller compression, you can see the exact retracement that I entered in this market. Okay, and here's a 5-minute view. We can see the initial movement. We can see the retracement. We can see the beautiful payout there to the 100%. We saw this market here pull a retracement off. Okay, 382 retracement. Instantly we saw the market here create support off of that, and I opened up my buy at the 1.3440 right there at that point, looking for the short, nice 20 pip payout here. Now that's a good way to start the Mondays, with a nice, quick and easy in and out trade. With that said, wrapping up this video, I will be posting here from now on every trade and video on the Muteki.com website, which is going to be changing very soon here to accommodate the new setup that we're going to be taking. So that's what we have. Hope you enjoyed. Hope you learned what you come here to learn, and that is trading. Until next time, have a great day and happy trading.